Hey traders, Raghee here. Welcome to Charts and Coffee for Wednesday. I am actually just logging in to my trade station right now. It's prompting me for a code, so hang on. Trying to get that done. Oh, that's not it. There we go. We're all set. Okay, so there we go. All right, so great to see everybody. I wanted to start off with the economic calendar because we have the countdown to non-farm payroll came out 45 minutes ago, actually 46 now, and that's the ADP non-farm employment change. If there are two big psychological data-driven, I'd say one psychological, the other's data-driven, end of quarter shenanigans. They are more dramatic than end of month shenanigans. And we have also the NFP, which is a data point where when we talk about on Thursday, and I'll likely mention it in the free video, we're going to talk about where do those May expectations for rate hikes sit in front of non-farm payroll. Now, we continue to see a very strong likelihood for a half-point hike, and that's been about as steady as any month has shown a half-point hike to be since we were waiting on what was going to happen in March. So half-point hike, when people say, is it priced in? Largely, I will say it is. It's not, when to me something is really quote unquote fully discounted, which is a ridiculous assumption to make. But when we know we've sort of crossed over that 80% barrier, when the majority is saying, look, we can look at the data, we can look at these target rate probabilities as provided to us from the CME via the Fed Fund futures, when we cross 80% on that, it's broad, it's accepted, it's known. And at that point, we can talk about something being fully discounted, right? All right, so that's going to be really what we are looking at going forward. What do we see the reaction to today's ADP? Gang, I really don't care what the ADP number is. It's not by any means any kind of reflection necessarily of what we're going to get on Friday. But psychologically, it kind of tightens the focus to, hey, those job numbers are coming around the corner. And then we have, like I said, a couple other data points to keep in mind. End of quarter, NFP, and then sandwiched in there and easy to overlook is the core PCE. Now, why is this one important? This is the Federal Reserve's pet inflation number. This is the one that they prefer. This is the one they favor. Now, the CPI and the PCE, you might say, Rob, inflation's inflation. It all depends on the math, and the Federal Reserve likes the math of the PCE. If we're looking at something that's going to influence the Federal Reserve and they're thinking around inflation, that number, 8:30 a.m. tomorrow, is going to be a big one. All right, so that's what we've got going on the calendar. There's a second calendar we need to talk about. And if you've been watching this show for any length of time, this is just the other calendar that we look at. And that is, and where is my little pop-up window here? There we go. This is the Estimize, Estimize, Estimize. You can see that in the upper left corner, estimize.com. And this is how I track earnings. This is how I follow the specific stocks, usually the high concentration weighted stocks within the indices and the sectors. I don't want to look at all stocks. I want to look at high concentration weighted stocks that are in sectors and indices that I follow, because that's where, as I like to call earnings season, I like to call this the tail wags the dog season, because you can get an individual stock that can have a disproportionate effect on the index or the sector, either because its weighting is so significant in the index or sector, or because the price movement is significant enough to make those moves real needle movers on the broader average or on the sector. So we keep an eye on these. Now, if you haven't already, you'll definitely going to want to check out We've made this available for I don't know how long now. Over at the Countdown Trader, if you search Countdown Trader earnings window on Google, just like that, Countdown Trader earnings window, you'll see the two links, and there it is, the 642 earnings window. And this is the explainer of how I play earnings. I do not play immediately in front of earnings. In fact, most of the folks in the rooms will know. I usually say, "Hey, I'm going to be out before earnings." So there's a way to play earnings where you're playing to the event pre, and there's a post. So after we get that volatility, after we get that significant move, what type of setup is then available? I don't play the event itself. I don't trade or bet on the event itself. We take advantage of the psychology to the event. We take advantage of the psychology after the event. And in this update, the 642 earnings window, I explain all that in detail. I think there's a video and everything maybe. But Trish has done a great job explaining how we focus on these. And so that's something you can check out, right, at your leisure. All right. So with that being said, as always, gang, this show is about your questions. So let's get to it. I've logged into my TradeStation data. So there we go. So by the way, I use TradingView. You can use for TradingView, and built in, you'll get the ETF and real-time stock and crypto and even Forex data. But if you want futures, you need to plumb in either the CME mini feed or whatever broker that works with TradingView. You can plumb that in. So TradeStation, AMP, Tradeovate, those are the ones that are coming to mind. They're always expanding that list. So make sure if you're looking at TradingView for futures that you have the data coming in. Otherwise, you're looking at quite delayed data. All right. So just a heads up there. But you do not need to worry about that for Forex. For Tradier is part of them now too. Lorna, you can plug in Tradier into TradingView. Oh, okay. So but anyways, check the list out. You'll see it's a growing list of brokers that you can use your brokerage data to feed TradingView. So Tradier is part of the list now too, which is great. So we have Forex, ETFs, crypto, stocks, and then just make sure on the future side. All right. So as always, let's kick it off with the questions. And Kim, what are my thoughts on X? Sure. Moving higher, double green, momentum, bullish, trend, bullish, north of the 200 propulsion. Now, the question is what we're seeing at the moment, this pullback, is that enough? Is that enough of a pullback to come down to, where are my drawing tools? There we go. Okay, cool. So is that move to this yellow dot, which is actually the 13 propulsion, the 13 EMA, is that enough? Well, when you look at the previous pullbacks, it looks like that might be all we would get. So that would be an aggressive or aggro consideration. Would I prefer waiting for, say, the 21, which is down in here? Yeah, I probably would favor the 21. That's just me. It's usually a better aggressive level to buy from, but we trade what we see, and we just accept that either this is a level from which I can control risk or it's not. So the answer is yes, it's buyable. 13 at least cracks the door open. 21 would be preferable, but it is a buyable pullback. Yes. All right, next up, Ian, when I say hawkish regarding FOMC member bias, do I mean bullish or bearish? So let's talk about some animals here. It's not bullish or bearish. It's a different description. That's a great question because I think we use a lot of lingo in trading and it doesn't always necessarily make sense. So bullish and bearish, this is market direction, right? This is market direction. that we're expecting things to go up. And then we have market direction, right? Where we think things are going to go down. I don't know why I shortened market, but spelled out direction. Go figure. So there's bullish and bearish, but hawkish and dovish is completely different. It's really not commentary about the action in the indices in the quote unquote markets, right? Which usually traders are referring to equities when they talk about the markets, right? So are we talking about indices and equities with hawkish and dovish? No, this is monetary policy that is really all about rate hikes, higher rates, right? Dovish would be more about rate cuts or lower rates. Now, hawkish doesn't necessarily have to be action. It doesn't. You can be hawkish and not hike rates because your talk, your messaging could be that of favoring rates, right? So dovish and hawkish can not only describe action, but they can also describe message. Now, the next layer is, are rate hikes bullish to the market? Generally speaking, they are not, right? Are rate cuts bullish to the market? Generally speaking, they are, right? So then just kind of down the line, connected but not directly, is do rate hikes and rate cuts create a bullish or bearish market? But bulls and bears, hawks and doves are really for different corners of what we as traders need to be aware of. Is the market in an uptrend or downtrend, bullish, bearish? Is there bullish or bearish momentum? Is there bullish or bearish sentiment? That's describing market behavior psychology, while the other's more about rates. It's more about those target rate probabilities and what the FOMC is going to decide to do. So hope that helps. All right, next up, Kevin asks, URA. We were just talking about URA and CCJ the other day. Uranium, and then CCJ, which is related to Uranium Camco Corp. So keep an eye on both of them. And the question is, it's pulling back into the wave. It's double green. Absolutely. We got a gorgeous volume ledge and point of control. Do I like this in this environment? I absolutely do. Yes, I absolutely do. And apparently now TradingView has a circle drawing tool. Let's see how that works. Circle drawing tool. Let's see. And circle. Oh, that's nice. Okay, so let's see how that works. Oh, we have to get used to using that tool. But yes, we want to think about a buy. Absolutely. And so the idea here with this buy would basically be, let's see if I can move this over here. There we go. Sinking into that area, right? Sinking into that area. And I'm with you. Volume ledge, wave, north of the 200 propulsion, double green, green momentum, green trend. All the pieces are in place. So Kevin, yes, I would look for an opportunity to get long calls. And if I'm looking at long calls there, I'll be looking at the pullback in CCJ and likely looking for long calls there as well. So really excited about the prospect of, there we go. That's way nicer than ellipse. Oh, awesome. All right. So yes, I am interested in the prospect of pulling back. Notice that the volume ledge is a little bit lower here, just a little bit lower, but we definitely do like this setup. Yeah, URA and CCJ. All right. So next up is, let's take a look here. Next up is, let's see. Gold, yes, gold. Oh, the commodities questions here, awesome. So gold, I got to tell you, Zion Spear, I look at this and I kind of kick myself. So the last time we bought gold was back in here, right? In this area. Obviously, right? Double green, pulled back to the wave, and then it had a pretty decent move back to the upside. And the idea was, if we get a move back down, that I wanted to do it again. We actually got that touch on the Darvas level yesterday between about 9:30 and 9:50. So we spent about 15 to 20 minutes in this area, and it wasn't very long. I had a lot of other trades going on. I was in the futures room. We were looking at day trades. This is just, and I can totally appreciate when you all tell me, Raghee, I've got so much going on. Sometimes I miss trades. I miss trades too, right? We all have other things that are oftentimes distracting us or just diverting our focus. And this was a straight up situation where I missed that window. My alerts went off. I just couldn't get there in time. And so the nice thing is, if you're a futures trader, you can just place a limit order, right? You can just place a limit order to buy. But if you're an options trader, it's a little trickier to do that, to presume what the price of the option is going to be when we get down to, say, 1903 on GC, or in terms of GLD, choose your own adventure, taking a look at the ETF, what that price is going to be when we get down to, say, 177 and a half, 177.30, that area. So that's where people say, Rod, can use Theo. It's okay, but it's not as accurate as getting the price trigger. In other words, GLD prints at a certain price, and then we head on over to the platform of our choice, take a look at the option chain, take a look at the bid ask, and then we begin to bid or split the bid ask to enter those calls. And I just, really, really good entry. Gosh. And so if you did go long, Zion Spear, so happy to hear that, because I missed it. And I wanted to make sure I let you all know I missed it, because everyone misses trades. I get people telling me, oh, Rog, I had to take a paper cut, or, oh, Rog, I missed a trade. My friend, you're a trader now. Welcome to the club, right? But awesome on that trigger. So where do we want to scale out? I would likely scale out at the same target we were looking at before. I don't know that I'm going to adjust that target. And I'm just checking here. I would still look at 182. Zion Spear, I would still look at 182, which was the target for the previous winner that we had. And then this was just a miss. Yeah, I'm still going to look at that. You probably kicked myself a bit. All right, but I'm glad you got a piece of it. Amazing. My opinion on DVN, sure. All right, overall uptrend, agreed. But by the way, if you look at this and get worried, don't worry about it. It was going into ex-dividend date, which is not a surprising move at the end of that dividend date. A little exaggerated. I think we had some other news accompanying that, but I don't think that's that should not be what we typically expect a pullback to look like. So we've got a good pullback here, and it looks a lot like the others. So it looks a lot like this pullback and this pullback and this pullback. And we've had volatile ones before, right? But it looks like we should get that variety of pullback. And so, yes, DVN is okay. But, I'm going to be in the Sector Secrets room here in about 120 seconds. And what we focus on is not primarily what am I going to do with a certain stock. This question before that is, why that stock? Why that sector? Why does this particular symbol deserve and where is my, here, oh man, there it is. Why does this particular symbol deserve our capital, our attention? Is it an outperformer in some meaningful way amongst the other stocks in the tide? Is it the best example of a bullish market? It is the best example of a bearish market, right? And so that's definitely something we're always going to ask first, but just a DVN for DVN's sake, on just its merit, yes, it's definitely something you can look at. Now at the 21, no. The wave, yes, I will not look to enter at the 21 on that one. I don't have enough propulsion dots to validate that level. All right, next up, XHB. Is XHB more ready for a potential short? I would actually wait for something more conservative on XHB. It's a downtrend, yes, but I'd probably wait for a bounce that's a bit higher than, I would definitely wait for a bounce a little bit higher. This is the volume ledge right there. So I'm going to paint that sort of gray. And then we have a nice Darvis level right in here. Awesome. So that is the zone that I would likely think about. XLF is not in a trend, or it might have just started trending, but it's not quite in a trend. Pullback buys, not quite. A buy to the point of control, I'm absolutely fine with that. If you want to do something in that area, I'm okay with that. But we need that pullback, right? Then XLRE, I don't play XLRE that often. Check the option chain, but I'm actually the least interested. I'm the least interested in XLRE, but good eye on XHB. I think pullbacks on XLF make sense, and we will continue to monitor both. Now, when it comes to XLF, you might want to look inside XLF and ask yourself, are there individual stocks within that tide? Are there individual boats that are bullish, that are leading the charge higher in XLF versus that tide, versus that sector? There might be individual stocks that are ready to go. So I would definitely check that. That's something we always want to check. So thank you for the questions, everyone. Awesome questions, as always. I appreciate it. We're going to be heading into our weekly Wednesday session in the Sector Secrets Mastery. We're going to be catching up on our current open trades, talking about paper cuts, talking about how we can better not miss trades. I'm going to use my example on gold, and I'm going to deep dive with the members and say, hey, look, these are the things I could have done, and then also accept these things do happen. So we're going to dive into a lot of that in just a few minutes. If you're brand new members, I'll see you all in that room in just a few. Everyone else, I'll see you tomorrow. Same time, same station for our charts and coffee. Caffeinate and dominate, my friends, and be good to each other.